Sydney, Reuters. Chinese shares climbed on Monday after a week-long break as a disappointing survey on the country's service sector did little to dent optimism on global growth, while political uncertainty caused turbulence for the Turkish and British currencies. Liquidity was lacking with Japan and South Korea on holiday and a partial holiday in the United States, where stocks will be open but bonds will be closed. The Chinese blue-chip CSI 300 index rose 1.7% to heights not seen since late 2015, partly in a delayed reaction to a targeted easing by the country's central bank announced a week ago. That helped offset a fall in the Caixin index of service sector activity to a 21-month trough of 50.6 in September, a contrast to healthier numbers in manufacturing. Spreadbetters also pointed to opening gains for most major European bourses. The global economy continues its synchronized recovery, as evidenced by robust data across regions, including upside wage growth surprises in the US and Japan, wrote analysts at Barclays in a note. At the same time, events in Spain and the UK also confirm a high level of political uncertainty. For now, the constructive economic developments seem to dominate political risks. Australian stocks still managed to put on 0.5%, while Nikkei futures added 0.1%, even though the cash market was shut. MSCI's broadest index of Asia-Pacific shares outside Japan edged up 0.02%, having rebounded by 1.7% last week. E-mini futures for the S&P 500 were trading 0.11% firmer, while futures for the Treasury 10-year note rose one tick. Bond yields had initially spiked on Friday in reaction to firm U.S. wage numbers, only to retreat as fresh jitters over North Korea bolstered safe havens. U.S. annual growth in average hourly earnings accelerated to a relatively rapid 2.9% in September, outweighing a 33,000 drop in non-farm payrolls. The pickup in wages boosted already high expectations that the U.S. Central Bank will raise rates at its December meeting and that further hikes are likely in 2018. Minutes of the Federal Reserve's last meeting are due on Wednesday and may well show enough support for a move by year-end. A host of Fed speeches are also due this week.